Silicon Valley Bank, a lender that specialized in serving tech companies and startups, failed on Friday after a run on deposits and a capital crisis. It was the second largest bank failure in U.S. history, after Washington Mutual in 2008. The bank had about $300 billion in assets and $250 billion in deposits. The bank's troubles began when it reported a $4 billion loss for the fourth quarter of 2022, due to bad loans to several tech companies that went bankrupt or defaulted. The bank also faced lawsuits from investors who accused it of fraud and mismanagement. The bank tried to raise capital by selling some of its assets and issuing new shares, but it failed to attract enough buyers. As news of its financial woes spread, customers started withdrawing their money from the bank, causing a liquidity crunch. The collapse of SVB has rattled the markets and raised concerns about a broader crisis in the banking sector and the tech industry. Some analysts fear that SVB's failure could expose other banks to losses from their exposure to SVB or its borrowers. Others worry that SVB's demise could hurt the funding and growth prospects of many tech companies and startups that relied on its services. However, some experts say that SVB's collapse is unlikely to trigger a systemic meltdown like in 2008, because the banking system is more resilient and regulated now than before. They also point out that SVB's problems were largely specific to its business model and risk management practices, rather than reflecting a widespread weakness in the tech sector. Silicon Valley Bank was founded in 1983 and had more than 4,000 employees and 40 offices worldwide. SVB served more than 30,000 clients, including many prominent tech companies such as Airbnb, Stripe, Coinbase, DoorDash, and Zoom. SVB also offered venture capital and private equity services through its subsidiaries SVB Capital and SVB Financial Group. SVB's failure was triggered by a series of events that started in late 2022, when several of its borrowers defaulted on their loans or filed for bankruptcy. These included Theranos. He said that SVB had a compelling valuation and a diverse revenue mix that differentiated it from other banks. Barclays analyst Jason Goldberg maintained an overweight rating on SVB Financial Group and lifted his price target from $500 to $550. He said that SVB had a unique franchise that was well positioned to benefit from the economic recovery and the innovation cycle. Jefferies analyst Casey Hare reiterated a buy rating on SVB Financial Group and raised his price target from $540 to $600. He said that SVB had a strong growth outlook and a robust capital return potential that supported its valuation. RBC Capital analyst John Arfstrom maintained an outperform rating on SVB Financial Group and boosted his price target from $525 to $575. He said that SVB had a solid core earnings momentum and a favorable risk profile that justified its premium multiple. On Friday morning, March 10, 2023, California regulators closed down the bank and put it under the control of the Federal Deposit Insurance Corporation, which insures deposits up to $250,000 per account holder. The FDIC said it would pay out insured deposits as soon as possible but warned that some customers may face delays or losses. The FDIC also announced that it had sold most of SVB's assets and liabilities to J.P. Morgan Chase, which agreed to pay $1.5 billion for them. J.P. Morgan said it would honor SVB's existing contracts with its customers and employees. The tech industry is also facing uncertainty as many startups and venture capitalists rely on SVB for funding, banking services, and advice. Some of them might lose access to their accounts or face delays in receiving payments or loans from SVB or other banks that are wary of lending to tech companies after SVB's failure. Some of the well-known VCs that use SVB include Andreessen Horowitz, Sequoia Capital, Excel Partners, Kleiner Perkins Caulfield and Byers, Benchmark Capital, Founders Fund, Y Combinator and 500 Startups. This is a developing story, and I will keep you updated on any new developments or information that comes out about SVB's collapse.